I'm back. So I put $4,500 into my Interactive Brokers account. It had about $500 left, which brings up to 5,000. And I'm going to start selling some credit spreads as a main strategy for this account. And today I sold my first put credit spread since I'm getting back into the game. And I guess so far it's doing pretty good. It looks like it's up 30 bucks. So what I ended up doing was I sold the Amazon 90 put and I bought the 85 about 45 days out. That's kind of a big strategy, is just to let that time happen. Usually with spreads this far out, it would take a long time to see a large percent move in your favor. But Amazon was rebounding after earnings, and so it's already up 30%. I'm actually kind of tempted to close it and take that first win. Uh, we'll switch to the portfolio view. You can see when I sold it, I got 98 cents credit because there's a $2 commission for doing that. And right now it's only worth 68 cents, so I'm up about $30, and I haven't really done that much with it. Go to the trade log, and you can see my credit for my deposit finally hit the account. It took 4 days. I guess Interactive Brokers is slowing down deposits to 4 days to make sure that they get through so they don't lose money, which is kind of bad if you're trying to get money in quickly to trade. So I couldn't trade earlier. On Tuesday, there was a Coke spread that I wanted to put on, and I couldn't do it because I had no money in the account. You need $2,000 in order to use margin, and they wouldn't give me credit even though I put the deposit in Monday. But that Coke spread would have printed pretty quickly too. Let's talk about how I put this on. So we'll go ahead and close this guy. And then here's Amazon. So why did I choose the 95, 8, or 90 put spread? Because looking at this chart here, you can see Amazon was oversold drastically after earnings. And if you hover over the icon here, you can see that they actually beat the estimates. So I'm not quite sure why they went down. Maybe there's news related to it. I don't know. I didn't really look that far. Hopefully Elon Musk isn't buying Amazon. uh, anyway, completely oversold. And then I was just kind of looking for a support because if you look, we're in a new area here where like this support has only been tested like once or twice, and actually it went below that, so is it going to go up? What I ended up doing was looking at a larger time frame, so I did 3 years. And from here, you can kind of see that there's a lot of volume in the past at this price range going back, if you go back a couple of years. So I think if Amazon does continue to drop, it'll kind of stick around the 95 mark, which is within my spread. I would have liked to get lower, but there just wasn't as much credit. So I did take a little bit of risk when you look at just the volume profile here. Like ideally, you'd be under this 94, so like do a 90-85 spread. And by doing the spread, I'm only risking $500, and I'm receiving $100 credit for selling the put spread. So really, just risking 400 for 125% return for 45 days, whatever it turns out to be. Pretty cool. Let's go ahead and look at the Analyze tab, just so you can see what it looks like. And I didn't look at too many stocks before I put this on. When you're doing a $5 wide spread, there's not much to be made, it feels like. So December 9th, I sold the 95, bought the 90. And then if we go to the risk profile, and this is what it looks like. If by expiration Amazon is above 95, then if you look at this blue number here, I made $52. Well, the prices here are wrong, but I make $100 off the one I sold. And then the max loss is going to be 500 minus the credit received. So the difference between 95 and 90, $5. We received $1, so $4 being risked. And you multiply by 100, so that's $400 I could lose if Amazon goes down and blows past 90. And that's basically the beauty of putting on the Amazon stuff. Down here, you can see exactly what I did. I sold the 95, so the one closer to the money is the one I sold. But this account, we can't buy 100 shares of Apple or Amazon at $95 each. We just don't have that money in here. So in order to put on this trade, I have to buy protection, which is what I'm doing with the 90 to limit my max loss. So my max loss is the difference between those two things, and then obviously minus the credit received. So I hope this was a good overview of this trade for you. I'm trying to get back into YouTube to make more videos because I kind of miss it. I need to work on my setup here. Hopefully it's not too echoey. I'm not good at audio editing, but it's a new house, so we'll see how this goes. And I'm glad to be back, and I'll see you guys next time.